All right, welcome back to Stock Tricks with Nick for this week's breakout watch list from April 4th to April 8th. In this video, we're going to cover 12 stocks that have breakout potential in the upcoming week. Like I often say on this channel, there's no absolutes in trading, so we're trying to stack as much probability on our side before taking the trade. That's why we're focusing on the strongest stocks in the strongest groups to improve that probability. This video is sponsored by MarketSmith, which is the trading research platform that we're going to be using to break down each of the stock setups. If you guys enjoy the platform and want to give it a try yourself, there's a link in the description below. Also by the description, in the comment section, is going to be timestamps for each of the setups that we go over, so you can go right to the stocks that you want to see. Quick disclaimer before we start, this is not stock or trading advice. This is all for educational purposes only. Trading comes with financial risk. Make sure you do your own due diligence. Here's the breakout of the stocks that we're going to be covering today. As you can see, they're in groups of oil and gas, steel, coal, and other. I'm not going to spend too much time on this because we got a lot of charts to go through. The first 5 stocks that we're going to be covering are all oil and gas related. So we'll start with CHK, Chesapeake Energy. Oil and gas exploration is the 10th strongest group out of 197 in the market. So that's an A+ group strength rating. It also has an individual composite rating, so an overall rating of 90 that takes into account fundamentals and technicals. It has an individual relative strength rating of 98. We're always looking for stocks with 90s in both relative strength and overall composite rating, so this checks that box off. Also has an accumulation distribution rating of A. That means many of the high volume days have come on up days versus down days. The stock is being accumulated, not distributed, meaning large institutions are taking positions versus selling their positions. Let's take a look at fundamentals. This has had negative earnings per share the last 3 quarters year over year, but their sales are increasing. They went from negative 55 to plus 37, minus 7, and then plus 147 year over year. Profit margin has been improving, 25%, 26%, 30%, and then 10% year over year. I also want to see in this industry, in this group, again, 10th strongest group, out of 58 stocks that make up the group, it's the 7th strongest based on relative strength and 47th strongest on composite. So even though the composite rating is a 90, this group is so strong that it's only the 47th strongest out of 58. One other thing that I want to look at is fund ownership. Is fund ownership increasing on the stock? And you can see that is true here. We went from 236 in March of 2020 when the stock IPO'd to 627 now. So from a technical perspective, this had a nice breakout area from the 50-day moving average around $66 on February 22nd. It ran all the way up to 88, pulled back to the 21 EMA, and then we bounced back up right into this 90 area, had a nice shakeout day on, I think this was Tuesday of last week, excuse me. And since then, we've been building right under that $90 pivot area. So a couple different ways to attack this. If we open right at 90, taking out the high on Friday, which was 90.76 is a potential entry here, or if we pull back to this 8-day EMA around the $86, $86.50, taking a position there, then you can use the stop loss under maybe 85, keep your risk a little bit more limited, build up a higher position because your stop loss is so tight from your entry. The only downside to that is you're more likely to be stopped out, but if you get stopped out, you get stopped out on a smaller amount there. So that's CHK, Chesapeake Energy. Next we have PTEN, and for disclosure, I do have a position in the stock, looking to add to it on Monday. So this is an oil and gas drilling, slightly different group, but still in that same concept. 6th strongest group out of 197, that's an A+ group strength rating. This has an A accumulation distribution, 94 overall composite, along with a 99 individual relative strength rating. Within the group of 11 stocks, it's number 1 on relative strength, number 2 on accumulation distribution, and number 2 overall composite rated. Fund ownership has been steadily increasing from December of 2020 from 385 up to 418 here. This does not have positive earnings, so that's a strike against it, but sales have been increasing. We went from minus 46 to plus 17, plus 73, plus 111, and has negative after-tax profit margin improvements, so that is another strike against it. But this one's very much a technical setup along with that group strength. Again, group strength A+, oil and gas is really the focus going into next week. It's been holding up the best while the market has pulled back for a couple days after a really nice rally. So PTEN rallied from 671 up to 1709. When was this? From the beginning of December up until March 8th. From there, it's flagged out really nicely, and my favorite day on this chart is March 29th here because it shook out. We took out the 8-day EMA, the 21 EMA, and many previous lows. We didn't take out this low here on the 16th, but this kind of shakeout really takes out the weaker hands in the name. And then look, we close at the high of the day with a 97% closing range on that day. Trade sideways the next 2 days, and then I picked this up around 1570 just to get some exposure over the weekend on a name that's setting up really well. I'll be looking to add to the position with a break over 16, which was 1602 was Thursday's high. So a break over 16, I'm adding to the position using a stop loss under either Friday's high or Friday's low, 1538, or Thursday's low, 1514, depending on your position size there. A little bit lower, and you'll have the 21 EMA setting up as a potential stop at 1508. Maybe just a stop loss under 15. But again, the larger your stop loss is from your entry, the smaller position size you have to take to make sure you're really focusing on managing your risk on the position. So that's PTEN. Next, we have PUMP, pump, very similar name, very similar setup, along with that shakeout. But this is building over the round number 14 versus building under 16. Same technical or same fundamentals, kind of same group strength, all that stuff. So with this, if we pull back into 14, that's a potential entry point because then we have the 8-day EMA at 1398, the 21 EMA at 1365. So pulling back into 14, again, you're more likely to get stopped out, but you can keep that stop much, much tighter in that at that entry point. Or if you're adding to, or maybe buy on that pullback closer to 14 and then add to it as it comes back over Friday's high, 1432 there for PUMP. Next we have RES, and I do have a position in this as well, started that on Friday. This is an oil gas field services, 13th strongest group out of 197. So that's an A+ group strength rating. This has an A accumulation distribution, 97 composite, 99 individual relative strength. Fundamentals on this is a little bit stronger. We went from negative, then plus 122 year over year, plus 300%. Sales went from minus 25, plus 111, plus 93, plus 80. Then after-tax profit margins, turning it around, went from minus 5 to even, plus 2 to plus 5. Within the group of 31 stocks, it's number 1 on relative strength, number 8 on accumulation distribution, and number 2 overall composite. Fund ownership has been kind of steady here from 269 December of 2020 to 292 this December. Very much a technical setup. We have that individual relative strength, 99, coming off the lows, 382, all the way to 1179. So about 3x there. From there, we pulled back into the 21 EMA on March 16th. We had a nice push out, kind of a false breakout on the 25th there. So false breakout, and then 2 days later, we get the shakeout under the 21 EMA. That kind of clears the deck, and then we get 1, 2, 3 consolidation candles closing above that 8-day EMA, which is now rising. And on Friday, we closed at the 85th percentile of the daily range. So nice move into the close there. Did so on less volume, which is one strike against this. But looking to add to my position over Thursday's high, which was 1124, with the stop loss under 1045 area. That's RES. Last oil and gas related name we have is VIST. This is in the number 1 overall group in the market right now. It has A accumulation distribution, 98 composite, 99 individual relative strength, much stronger fundamentals. We have plus 122 earnings per share growth, plus 113, plus 117, and then plus 338 year over year. Sales were up 58, 223, 151, and 146. And after-tax profit margin improving 4, 3, 2, and 18% in that last quarter year over year. Within the group of 15 stocks, again, this is the number 1 strongest group in the market. 15 stocks makes up the group, and it's number 1 on relative strength, number 3 on accumulation distribution, and middle of the road 8 on composite overall basis. Not too many funds taking positions in this. We went from 23 in December of 2020 to 26 last December. But again, from there, we did have a nice earnings bump in February. So this does not reflect the fund ownership from December to March. We'll get those numbers, I think, in a week or two. So that'll be interesting to see. My guess is this is going to be drastically improving because we do have heavy volume on that up days showing accumulation of the stock. From a technical perspective, we had a nice cup, a little handle here, and a breakout on February 23rd. We pulled back to the 21 EMA, shot up again, and now we're building over that $9 range with a shakeout on Monday, similar to many of the oil and gas names. On Friday, we put in an inside candle with a 62% closing range. So we're looking either to take this if we pull back into $9. We have that 8-day EMA as another stop loss, and so another potential support. We have $9 as potential support. The 8-day EMA is potential support. So you're less likely to get stopped out if you're aligning more of those support areas in that area. Buying against 9 is a potential entry point, or buying with a break over Wednesday or Thursday's high, which was 933, 934 as a potential entry for VIST. Next, we'll go to another very strong group, Coal Energy, third strongest group out of 197. This stock is BTU, so we got a group strength rating, obviously A+ there. Accumulation distribution, A, 98 composite, 99 individual relative strength. This has not had strong fundamentals up until the December quarter, where we had earnings per share growth of 412% year over year, sales of 72%, and after-tax profit margin improvements of 40%. Within the group of 12 stocks, this is number 1 on relative strength, number 2 on accumulation distribution, number 5 out of 12 overall composite basis. Fund ownership has been drastically increasing from 172 last December to 284 this December. We had a nice big cup here, a little handle shakeout on February 25th, and then a break from 1434 all the way up to 27, nearly 100% increase before another pullback, another pullback, breakout, shakeout, and now we're starting to tighten up above this $25 area. I'll be a little concerned buying above with a break over Friday's high at 26. I would much rather this range tighten up a little bit, pull this back into 25. You can see volume starting to tighten up, lower volume. We want this range to tighten up to improve our trade odds, because if you see all this volatile action here, if we enter at 25, 27, something like that, if we enter at 26, this stock has the characteristic of breaking out and then quickly coming back, then breaking out, quickly coming back. So you're going to get shaken out of this name using a traditional stop loss, unless you're buying in a pullback against that 8-day EMA, the 21 EMA, something like that. So I don't want to be chasing this name higher. I want to be starting a position as it's pulling back to key support, because as we can see, this name likes to shake people out. I don't want to put on the trade if I'm just going to get shaken out. So that is BTU. Another stock in that same group is AMR. I would show it on this, but it's so strong, it's off the charts for MarketSmith. So go ahead and take a look at this on a different charting platform. It's in that same coal group and is showing a little bit more relative strength than BTU and doesn't shake out as much there. Next group I want to cover is steel producers. So that's the 7th strongest group out of 197. We'll start with the stock CLF. It's got a group strength rating, A+, obviously, B+ accumulation distribution, 97 overall composite rating, along with an individual relative strength of 98. Within the group of 16 stocks, this is number 2 on relative strength, number 5 on accumulation distribution, and number 6 on overall composite basis. Fund ownership has been increasing from 407 in December of 2020 to 604 this December. Taking a look at the fundamentals, very, very, very strong in this group. We had earnings per share growth of 775, 571, over 1,000, and then 642 year over year for those last 4 quarters. Sales were up over 1,000, 362, 265, and 137. And then after-tax profit margins improving 5%, 17, 21, and 18%. So we have the group strength, we have the fund ownership, we have the fundamentals, checking all those boxes. We're improving our trade probability, aligning all those things. Taking a look, technically, we had this nice base forming with a shakeout under the previous lows. So really taking out all the weaker hands here before moving up. Another quick shakeout on the day before the breakout on February 24th. And then the market bottomed on that day before putting in a slightly lower bottom later in March. But February 24th, that's when Russia attacked. So that was kind of the bottoming of the market. This shot up from 17 to 28. Had a quick pullback to the 8-day, a little bit undercutting that here before moving up. And really, it has not closed under that 8-day EMA since. You can see from March 24th onward, it's been tightening up above that 8-day EMA. And now we have a nice top pivot to work with, breaking over Friday's high, which was, let's see here, high 33.25 area. That could be a potential entry point. It is a little bit extended here. So if it pulls back into that 8-day EMA around 31 and you start a position there, or if it does, like the general market pulls back and steel as a group pulls back, looking at this nice round number of $30, and you have that 21-day EMA coming up as potential support as well. The second steel name that we're going to be covering is STLD. This has an A- accumulation distribution, 98 overall composite, 97 individual relative strength. Within that group of 16 stocks, it's number 4 on relative strength, number 1 on earnings per share rating, and number 2 overall composite. So very strong earnings, 140, 625, 875, 500% year over year. Sales up 38, 113, 118, 104, and after-tax profit margins improving 13, 16, 20, and 22. Fund ownership on this has been increasing as well, 1251 in December of 2020 to 1595 this December. Really beautiful chart here. We had that shakeout similar to CLF, held 50, nice round number, held that on the on January, January 24th or so. Already put in a higher low in February, so that's a little bit stronger relative strength compared to CLF, because as CLF was putting in its low on the 24th, this had already put in its low on the 24th of January, put in a higher low here, did undercut 60, but still putting a higher low, got out, nice consolidation, pushed out, and now we're consolidating again. We have a nice 3-day pivot, each of the highs of the last 3 days, 86.31, 86.21, 86.29. So a break over 86.31 is a potential entry point, and then a stop loss either under the lows of those 3 days around 82.89, or if you're a little bit more wider with your stops, you could use the shakeouts low, which was 81.27, put it at 81.24, just so you're under that by a little bit. And then you'll have the 21 EMA catching up as well. So that'll keep you in the trade a little bit longer. But again, because that stop loss is a larger distance from your entry point, you have to use a smaller position size, so you're making sure you're still managing your risk. And finally, I have 3 stocks from different categories, not steel, not oil, not coal. So first is Tesla. This has been just an absolute monster, both volume, price action, really showing great relative strength here. You guys know what Tesla does. It's got an A- accumulation distribution, 98 composite rating, 95 individual relative strength. Within that group, it's number 2 on earnings per share, number 1 on relative strength, number 1 on overall composite basis. Fund ownership has been exploding, $23.95 in December of 2020 to $33.67 this December. Very strong fundamentals. Earnings per share were up 304, 230, 145, 218. Sales improving 74, 98, 57, 65 year over year. After-tax profit margins up 10, 13, 15, and 16%. Really, this is the fundamentals are strong. That's great, but this is a technical kind of setup here. We came off the lows. We put in higher lows while the market was putting in lower lows. The NASDAQ was at least, and then just ripped off the lows here from $17.50 all the way up to around $1,100 per share. From there, this nice little gap up was when they announced that they were going to be doing a stock split. I believe it's 5-for-1 there. So that, even though it doesn't change the fundamentals of the company at all, it is a nice little bump there. And from there, you saw the NASDAQ pull back pretty heavy the last 3 days, especially semiconductors the last 3 days. But this has really stayed steady, very, very light pullback and on very light volume, which you love to see because not many people are selling as the market's pulling back. No one wants to sell this name, so it's showing relative strength. We're looking for a break over Friday's high, 1094. Call it a break over 11 as a potential entry point. Or if the market really pulls back and this pulls back into that nice $1,000 area, you'll have the 21-day EMA as potential support as well. Next, we have CrowdStrike, CRWD. That's in computer software, 54th strongest group out of 197. So B+ group strength rating, B+ accumulation distribution, 95 composite, 79 overall relative strength rating. That is a little bit lower, but from a technical perspective, it's doing some things that you really like to see. Had the highest volume in 1 year on the earnings, where we saw earnings per share up 131, sales up 63%, after-tax profit margins up 16% there. After that move right here, we did pull back while the market was pulling back to that 50, the 21, and the 8-day, all around the same price. This would have been a beautiful entry. I did not take that, unfortunately, but that was your first kind of ideal entry point. Since then, we've drifted higher, and now we're building under that 200-day simple moving average. That's this black line here. And while the market was pulling back, this was putting in higher highs, higher lows, higher highs, higher lows, and still closing up on those days, which the general market was down. So this is a sign of relative strength. We have a nice clean entry point, breaking over breaking over 230, the 200-day simple moving average, and Friday's high for CrowdStrike CRWD. And last stock I want to cover today is DAC. This is in shipping, which is the 15th strongest group out of 197. A bunch of shipping stocks showed up on my general watch list. So chose the strongest one that I could find. Group strength A+, accumulation distribution B+, overall composite rating 99, individual relative strength rating 97. Earnings per share were up 111, 95, 179, and 166. Sales up 24, 25, 65, and 80. After-tax profit margins, unbelievable here, 44, 47, 56, and 59%. Within the group of 28 stocks, it's number 10 on relative strength, number 9 on accumulation distribution, number 1 overall composite basis. Fund ownership has been improving. We went from like 9 up to 66 in December of 2021. And then technically, this had a nice little cup and handle, broke out over $100, found some resistance at 107, and since then it's been building over $100 right here. You have the 21-day EMA back over 100 now, and we're looking for a break over Friday's high, which would be 104.50, or if it comes back into 100, then you have the 21-day EMA. You also have that nice round number of $100 to work with as a potential support there for DAC. And that's going to be the breakout watch list for the upcoming week. If you guys enjoyed the video, please leave a like and subscribe to my channel. And make sure you follow me on the other social media platforms, Twitter, TikTok, Instagram, Facebook, and StockTwits. I post often on StockTwits and Twitter the most. This video was sponsored by MarketSmith, which was the trading platform that we just used to break down each of those stocks. If you guys like the platform and want to give it a try yourself, there's a link in the description below. You guys can try it out 3 weeks for just $20. Thanks for tuning in, and I hope you have a great week.